Hey everyone, welcome back to another episode of The Short and Long of It. It's Scotty. This week we saw some pretty significant developments in the market. We had Trump putting a 90-day pause on tariffs he just implemented last week, as well as a cooler than expected inflation report. Here's what you need to know. So President Trump announced even more reciprocal tariffs on Chinese imports, including electrical vehicles, batteries, and solar imports. However, a new report just dropped and some key tech imports are going to be excluded. Most notably, smartphones, laptops, and semiconductors. So think Apple and Nvidia and TSMC, AMD even really going to benefit from that. So while I'm recording this on Sunday, Trump could rescind all those exemptions he just put in place yesterday. But I'd be looking for the market to at least have a temporary bounce Monday going into Tuesday, unless anything changes. So let's go ahead and jump into the March CPI report. So the March CPI report showed inflation increasing 2.4% year over year, lower than the 2.6% forecast. On a monthly basis, inflation actually declined 0.1% compared to the expected 0.1% increase. Core inflation, which excludes food and energy, rose 2.8% year over year, also below expectations. Month over month, core inflation increased just 0.1%, a notable slowdown from previous months. Despite the positive inflation data, the market's really hanging on to Trump's every word. With any given day, we have reciprocal tariffs that are being implemented, exempted, and there's a lot of volatility that's occurring because of that. And of course, expectations keep shifting with the federal rate policy. There could be more than the two expected interest rate cuts on the horizon, or maybe 3 or 4 or 5. Who really knows, because there's so much uncertainty with the trade war going on. In these uncertain environments, it's critical to invest in companies that give you that strong conviction. That means companies and businesses with strong fundamentals, a clear long-term growth potential, and a ton of cash flow. Holding these quality investments during these volatile periods can keep you from sort of pulling the rug out from underneath yourself and selling in a panic. Volatility is definitely here to stay and going to be a long-term theme in 2025. But with a clear strategy and an informed perspective, you can navigate all this uncertainty with confidence. That's all I have for you today. So as always, be safe in the markets and y'all take care.